Welcome to Market View with Ike Ios and friends. This show that not only reveals and analyzes the inside story on today's market news, but also uncovers the areas where investors can make money right now.
Good morning. Mike Ios, he's your host for my guest, a very good friend, Mrs. Erin Swenlin. Hi, Erin. How are you?
Hi, I'm doing great.
Erin, I'm looking forward to speak with you today and kind of go over the technicals and get your thoughts on what we may expect going forward, because after a 15% decline in the S&P, 20% decline in Nasdaq the first part of the year, we have had a spectacular rally the last few weeks. So I'm curious, do the technicals support that the rally will continue, or we're about to stall out?
Right. It's sort of an interesting situation right now. So really that rally, it was a broad market rally. We had all of the, pretty much all of the sectors that were involved in it. But the minute we started to see problems in those aggressive sectors, like consumer discretionary and technology, that's when we started to see this downturn. And currently, leadership has switched to the defensive areas, utilities, real estate, and healthcare. Some of those leadership roles are now being taken over by the defensive sectors. And as we both know, once, if you're seeing those defensive sectors rallying and holding the market or keeping the market moving up, so that typically is when you're going to see that downside reversal. So, we're keeping an eye on that. Short term, things are looking a little bit better, but I'm still bearish in the intermediate and longer terms on the market in general.
Well, let's talk about our first chart, which is the SPY, the chart for the 1 year.
Yes, the 1 year. And I brought the 1 year because it has stochastics on it, and I think that that's kind of important to look at as well today. So first of all, the RSI stayed positive. This honestly has kind of a flaggish look, a bull flag look. But the problem I see are, this momentum is failing. We had a couple days of rally earlier in the week, and, the PMO is looking pretty good. But now that oscillator is starting to turn down. So we know that momentum has been lost and is still being lost since it's pointing lower. But, when you look down, the VIX is starting to, we do invert our VIX, and it is staying above that moving average. So that's a positive in the very short term. But internal strength, when you look at stochastics, internal strength is a problem because stochastics are continuing to fall, and they're not in oversold territory. And typically when they're falling, the market is going to be very weak. So we're having kind of this mixed messages, if you will. But I think that's where our Swenlin trading oscillators come in.
Our next chart is the Swenlin trading oscillators, which I have found to be very helpful when it comes to the short term. What are they saying right now? What do you see?
Really what I see here, the STOs before that top were starting to show a negative divergence. And sure enough, that really played out as expected. And they continued to move lower, including on days where we had rallies. And that was a concern of mine, is that they were still moving lower. But yesterday, they did actually turn up in, I wouldn't call it oversold territory, but certainly somewhat oversold. And I found that to be very positive for the short term. But the issue we have here right now is that, as you were saying, some breadth issues. We only have about half of the S&P with their price above the 20-day EMA. I'm not usually a fan of trading anything that has price below the 20-day EMA. So that tells me that there aren't a lot of stocks that are attractive out there in the S&P. And then you go to the next window, and you can see that even with some of these rallies, the PMO's rising, getting rising momentum in the S&P is just not happening. And we have less than half of the S&P with rising momentum. That's really not going to fuel a good rally. You need to see some of that positive momentum. Not bad to see the short-term indicators, the Swenlin trading oscillators turning back up.
Next, we're going to pass from the short term to the intermediate term by looking at the intermediate term breadth and value momentum indicators.
Yes, and this chart is telling you why I am bearish for the intermediate term, one of the main reasons, and that is because these indicators are topping in very overbought territory. They're still overbought, at least as far as the ITBM and the ITVM, but you can also see those crossover buy signals are starting to peter out here. We only have about 62% of the S&P with crossover buy signals. And let's be honest, we just looked and only, 46% had, rising momentum. So this is just going to get worse. You can't get buy signals if, you have your PMOs falling. So
our next chart is the 1 year for gold. And gold has really come to life the last few weeks.
Yes. It's been, with the way gold has been acting, we had that big decline, and now it's kind of, been in this kind of consolidation above that 50-day EMA. And in the process, it's formed kind of an obscure pattern, the diamond reversal pattern. I don't know if you're familiar with it. It's hard to, you don't see these very often at all. And I think that in this case, that's what we're seeing. And these are reversal patterns. So my expectation here is that we'll get a breakout. And, obviously we know what's happening with GLD today. It is up over 0.5%. So we are getting that breakout from that diamond right now. So I think that looks good for gold. RSI is positive. Stochastics are rising and are now positive. I just need to see that PMO turn up, and it hasn't done that. So I suspect with the breakout from that reversal pattern, we are going to see that PMO turn up, and I think gold is going to be shiny again, if you will.
Now, our next chart is XLE, the energy sector of the S&P.
Yes, and you'll note that we have all of those, what I call under the hood indicators that really measure the participation very well and give you a really good sense of what the bias is. And, energy kind of did its little consolidation thing, and now it is breaking out again and hitting these new all-time highs. The chart is really shaping up right now. RSI has been positive for a while, even during that consolidation period, but we have the PMO now turning up. And then when you look at participation, 100% of stocks have their price above their 50 and their 200-day EMAs. 100% have a 50 above their, or a 20 above their 50. That's measured by the silver cross. That tells us how many stocks have a 20-day EMA above the 50-day EMA. That's 100%. Golden cross, how many of them have a 50 above the 200-day EMA? 100%. The only place where we were seeing some shrinking participation was in percent stocks above their 20-day EMA. But even that is above our bullish 70% threshold, and it is rising again. So I see a lot of strength here in energy. It spent a lot of time being a little boring, moving sideways, but it stayed above its 20, and now we're seeing a breakout. So this is really my sector to watch next week, because I think we're going to see even more upside movement there.
And how about the last chart, ExxonMobil?
Yes, so this is my diamond of the week now going into next week, based on the fact that we are seeing what we are in the energy sector. I like that we're seeing a nice little breakout here in the short term. All of my indicators are doing what they should. We have stochastics above 80. We have a positive RSI, and we have PMO crossover buy signal that's on tap here. And I wouldn't be surprised to see that happen very soon. And then, of course, relative strength here is starting to pick up for the group in general, but also for ExxonMobil. So I like the look of this chart. This is my diamond of the week. I think we're going to see some really nice movement out of ExxonMobil next week.
Erin, anything else you would like to add?
I would just say that I would love for you to come check my website out at DecisionPoint.com. And right there on the homepage at DecisionPoint.com, you'll see a link for my free trading room that I do on Mondays at noon. It's Eastern. It's a great way for you to see kind of our process as far as trading goes, and just get a taste of DecisionPoint without having to buy in to one of our subscriptions, which of course I would love for everybody to do, but that's a really great way to go in and sort of get a taste of what we do at DecisionPoint. So recommend that you go to our homepage, sign up for our free newsletter, sign up for the trading room. The recordings go out, so even if you can't attend it live, you still are going to get that recording as long as you're on that free email list. So that would be my parting word.
Erin, thank you. Have a great weekend.
Yes, you as well.